Hey everybody, we are back, and here are the top 5 things this week that I wanted to discuss and I think you should know about. The first one is Reddit has officially filed for IPO and should be going public in the next few weeks. I'm not the biggest user of Reddit, but 73 million other people every day are. Kind of like Twitter. I think that's where a lot of news accumulates, a lot of interesting information happens, and some really good conversations also occur there as well. It's an interesting site in terms of their ads, just because it's a lot of anonymous users, but those anonymous users have helped generate over $800 million in revenue. I don't know how the ads work in terms of how targeted they can be. If you're familiar with Google or Facebook, you can drill down like Cambridge Analytica style to demographics, to specific locations based on a whole host of other factors, hence why those companies print money. But the kicker is, last time Reddit raised capital a few years ago, it was valued at $10 billion. Before all the speculation of them going public, because that was 2021, 2022, they then got revalued at about 6.5 billion. And now the speculation is that they will go public at probably 5 to 6.5 billion. So the later stage investors are going to take a haircut, probably 50% plus, give or take. I also assume that there were some protective liquidation rights of like 1, maybe 2x, and maybe some ratchets. So if they believe in the company, it really shouldn't be too big of an issue that the stock will go up, growing 26% modestly. And really interesting that right before the IPO or during the process, they announced a mysterious buyer of their data. Came out afterwards that it was Google. That's basically a $200 million deal to buy all the information, their API data access to their user posts. These large language models, AI companies, Google in particular, who has the competitive advantage of size and cash, need as much data as possible. And if you're going to go anywhere for data, Reddit, no question, is one of the top spots for it. So we'll see how that turns out. Definitely no companies have been IPOing, so we're really hoping that this kind of opens up the proverbial window of IPOs, because there's a huge backlog, mostly of overvalued companies, but some that have built really good businesses. But Reddit is losing only $90 million a year. This is after being in business for 15, 20 years, so still some questions about their business model, what their growth plans are, and what they're spending a lot of money and R&D on. Speaking of other companies that have not worked out, that were kind of ZIRP, the zero interest rate phenom timing, was Thrasio. If you're not familiar with them, they are an Amazon roll-up. They raised $3 billion since 2020, 2021. Basically, they were trying to roll up Amazon businesses. Amazon is a huge marketplace. Almost anyone can sell on there, 1P, 3P, however you want to do your distribution. They thought, why don't we just buy up all of these different potential CPG products, and we can run it better. We'll have an internal agency, we'll cut costs, we can have economies of scale, we can figure out the shipping and logistics, and it almost worked. They raised $3 billion. They had plans to go public, and unfortunately all that fell through, leadership and layoffs, and officially they've just filed for bankruptcy. And so they raised so much money that everyone thought it was a good idea. So there are dozens of other companies out there that were trying to do the same model. When a company raises hundreds of millions, billions of dollars, like in the AI space, maybe a little bit more real, always VCs need a player in the game. So VCs then pumped hundreds of millions, billions into other companies. And so this is kind of the end of an era that CPG, direct to consumer, kind of out of fad right now, though I still believe in it. I have some great investments in the space. It's a logistics business, and that's what people didn't fully understand. Yes, you need a good brand. Allbirds is down, Warby Parker's, people know all these names, but it is hard to continue to grow these companies with a very healthy SaaS tech margin of 70, 80, some of them 90%. So definitely end of an era in that regard. On the other side, Vice Media just filed for bankruptcy, I guess finally as well. This was years in the making. They last were valued at $5.7 billion, which for a media company is definitely very high. But this was years ago when TPG invested $450 million in 2017. So this is years in the making that they were slowly just on the decline. I can't even recognize or name what Vice Media has become, what they work on, what they own just in normal kind of day-to-day conversations. But this was the hottest thing. Disney was going to acquire them, but instead the Murdochs invested Fox. Iger, I believe, invested $200 million. So there was something there. Media definitely had its own heyday. And this was kind of like what I always say, kind of false positives. The Huffington Post set this off. When the Huffington Post was acquired for a few $100 million, Arianna Huffington was at the right place at the right time with Hippo as well. And they were very successful at what they did. But now we have the BuzzFeeds, which are down 99% since they went public because the media business is, one, difficult. And I always talk about this, that I have a media background, PR, comms, journalism. So it hurts me to see all of these journalists get laid off and a lot of these publications taking hits. And especially when people now today, for certain reasons, good and bad, are not trusting the mainstream media. There are definitely people who write bad pieces, fluff pieces, clickbait, because it's all about eyes. You have to get eyeballs on your site and then sell kind of general, not targeted, as I was saying before, like Reddit and what Google and Facebook can do. So for the media landscape, it's been really difficult. Now, on the complete opposite side, Apple has been trying to build a car for years. It's always been speculated that, great, they did the phone, they did the watch, they have their computers, they just launched the Vision, mine's over here. It's really cool. I only really watch shows on it now, but like the whole entire way of creating a seamless atmosphere, beautiful product. I'll do a review on that another time. But they shut down the car division. Just like Rivian is down significantly, Lucid is down significantly, Polestar is down significantly, Fisker is going to go bankrupt again for the second time. Basically, it is Elon's show. Even all the other companies, Ford, I believe it was Mercedes and probably even Volvo, have said they are not going to hit their all EV kind of mandate by 2030. It's just not happening. The demand isn't there. So no idea why specifically Apple shut it down. They're very secretive. And everyone's like, oh, they spent $10 billion. Apple makes that in a quarter in terms of profit. They have $100 billion sitting in cash. And that was also spread out over almost a decade. So to them, it definitely is a blemish, but they also did the Apple TV. People have it, it works, but not every product will. And Elon Musk, he is definitely the winner when it comes to electric cars. He figured it out, whether you believe in it or not. The profit, sales, the price of the cars are dropping, but he is the only one that has been able to actually do it. And then finally, closing out, on the venture space, it's still, I think, almost at the bottom. Definitely, it's been difficult to raise capital as a founder for my investments, for people that I'm meeting with. But the funds themselves, the emerging managers, the less than $50 million funds, give or take, I think are getting hit the hardest. A lot of LPs have flocked to safety. You don't get fired if you invest in Sequoia or Andreessen, and I totally understand that mentality, that investing in a small first-time fund, whether they worked at a fund, they worked at a startup, or just have a lot of experience financially and know people to help raise capital, is difficult right now. And I think that's really going to hurt the early stage pre-seed, seed funding, even though the later stage A's are super difficult right now, B's and growth are almost non-existent. So this is where I think family offices will come into play. They've always dabbled. I'm in a lot of groups. I'm in a lot of chats. We're an investor in 4 funds, 3 emerging fund managers, and a crypto fund, all first-time funds. And it is difficult right now because they all got inflated valuations. Some made some good investments, some bad investments, but it's only been a few years and it's been difficult to show DPI, TVPI, all the things that show that you're good at what you do. MOIC, money over invested capital, that you made investments, you're up even though it's not realized. And that's fine. We don't expect to make money on our investments for 5, not even, more closer to 7 to 10 years. So I think family offices are really going to fill in this void. Smaller checks, 50, 100,000 into the millions in the groups and chats I'm in. People, I polled a family office chat. 26 said that they have invested in more than one fund. Probably some overlap. I don't know the check size. I'll get some more data shortly, but that's over 50 funds. And I think there's a few thousand funds out there. So it really is all about visibility, building trust, and over time, unfortunately, the statistics show that 2/3 of them can't raise a second fund for whatever host of reasons. They made bad investments. They don't want to do it. The landscape has changed, right? Everybody's all into crypto, then AI. And so LPs, they also move on if you didn't give good updates. It's difficult. You have to run a full business. Raising capital is a full-time job as a startup, founder, or as a GP. Everyone is always raising capital. And I think family offices right now have a really opportunistic time to shine, to fill that void, become an anchor in the early stage investing world. So if you have any questions about any of this, please let me know. As always, you know where to find me. Thanks.